Welcome back to the Next Mission podcast. I'm your host, Alex Leonovich. Last week, we began our four-part lending series by talking about something every successful home purchase needs before you ever start shopping, a financing strategy. We discussed choosing the right lender, understanding your monthly payment, knowing your cash to close, and why preparation gives buyers confidence. Today, we're going to follow your loan after you submit your application. This is the part of the process most buyers and, quite frankly, real estate agents never see. It's also the part that causes some of the greatest anxiety. Your loan disappears into something we call underwriting. Suddenly, you're being asked for more documents, maybe another bank statement, a letter explaining a deposit of some type, maybe some updated pay stubs, verification of employment again, right? Like we turn in all this stuff, and then we kind of keep getting asked for the same things over and over, and it does create anxiety. And then the phone rings, an email arrives maybe, and buyers out there immediately wonder, and I've gone through this myself, did something go wrong? Most of the time, the answer is no. Today we're going to pull back that curtain, as I talked about at the end of the last episode, and explain what underwriting really is, what the underwriter is trying to accomplish, and why understanding the process can replace uncertainty with confidence. So let's get started. Now here's the setting. The underwriter has never met you. One of the first things every buyer should understand is this. The underwriter doesn't know you from Adam. They weren't sitting with you when you met your real estate agent, right? They didn't walk through the homes with your family. They don't know your story, right? They don't know anything about you, nothing other than what you provide them. They don't know how excited your children are about the backyard of the house you've chosen. They know one thing. They know a loan file. Their job isn't to approve people, and that's one of the biggest misunderstandings. Their job is to evaluate risk using documentation. That may sound impersonal, but it is, right? And that's okay. We need people evaluating documents and making judgments about risk, not to be emotionally attached to the file or the person, right? We want that objectivity. That's what the bank wants, more importantly. Every borrower deserves the same objective review, right? So it's not just the bank, it's you too. You want that person going through the process, treating you like everybody else, so that you get the best shot at going forward with your loan. I want you to think for a second of this like a mission plan. During my career, every operation required verification. Everything, right? We always wanted truth, we always wanted facts, and we always wanted them in a timely manner. I didn't want old information, I wanted new, right? And it's not because we didn't trust the people giving us the information, but because important decisions deserve good and timely information. If someone said we had enough fuel, we're going to verify it, right? If intelligence suggested that a route was clear, we confirmed it, right? If weather affected the mission, we made sure we adjusted the plan, right? And we knew how that weather had affected the mission, right? We confirmed it. High water, washed out roads, those types of things. Buying a home works much the same way. Your lender gathers information. The underwriter verifies it. The goal isn't to create obstacles. The goal is to make sure everything supports a successful loan application. I like to look at this as like a three-legged stool. Legged stool, not school. I like using underwriting with a simple picture. Imagine a three-legged stool. Each leg represents one part of your financial profile, right? So we'll start with the first leg, income. The second leg is credit, and the third leg is assets. If one leg is weak, the stool is unstable, right? You don't trust it. The underwriter's job is to make sure that all three legs, income, credit, and assets, support the loan. So for income, first, can you as the borrower reasonably repay the loan? The underwriter is going to review the following: employment, pay history, your W-2s, tax returns, self-employment income if you're self-employed. Verification, I want to stress this. Verification is not about suspicion, right? It's about consistency. Does the documentation support the income being used to qualify? Right? Did you have a great year last year, but there's nothing to say you're going to have a great year this year? Were there gifts given last year that may or may not be given this year? Right? We're painting the whole picture, not just a piece of it, not just the one maybe we wish that they would see. They're looking at the whole picture. Similarly with credit. Contrary to what many people believe, credit isn't simply a score, right? The underwriter also reviews your payment history, your debt obligations, the length of your credit history, some recent inquiries, which happens when we're searching out loans, right? We've all had that. Your overall credit profile. A strong credit history demonstrates a pattern of responsible financial management, right? A pattern, a trend. It's that consistency we're talking about. All right, assets. Do you actually have the funds necessary to close? We can give you the loan, but in every loan, there's going to be cash that is going to have to be put down, whether it's a down payment or for other parts of the closing costs. Can you document your down payment, those closing costs? Required reserves, right? We don't want you putting down your last dollar to get a mortgage started. This is why your bankers and lenders are asking for bank statements. They're documenting, they're not guessing, they're not hoping. So we've all been there. You're applying for a loan and they keep asking for documents. To me, this is probably the most frustrating part of underwriting. I've already uploaded, and you've already uploaded all the documents that they requested. Then somebody asks for them again, and you wonder, what did they do? Did they lose them? Or they ask for one more explanation. Maybe it's a large deposit that you had. Maybe it's an old address that we don't really care about. We wonder why that's important. Maybe it's a missing page from a document. Most buyers assume someone wasn't paying attention, right? That darn lender. They just need to be a little more detail oriented. They need to look through the page. It's all there. I uploaded it. And usually that's not what's happened. Underwriting is dynamic. As one question is answered, another one may naturally arise. The goal isn't to create more paperwork for you, although sometimes it seems like that is the case. The goal is is really a complete and accurate loan file. One word makes buyers nervous, right? After underwriting, one word makes buyers nervous. And that's this word conditions, right? When people hear your loan has conditions, again, we're back to the sky is falling and there's something wrong. And in reality, every loan receives conditions. They may be simple. Just think of them like a checklist. We need you to provide one pay stub between now and when we close on the loan. We need you to sign one additional disclosure maybe that has already been prepared for you to sign. We need to verify one more bank statement. We need to clarify your employment. And once those items are complete, the loan continues to move forward towards approval. This isn't the place where they're continuing to ask you for more stuff. This is a checklist, like I said. These last 3 or 4 things, if you do them, your loan will move forward to approval. Conditions are not bad news. They're simply the next step in the process. All right. We've been through that. We've been through underwriting. We've been through conditions. What buyers should avoid? All right. So you've done all this paperwork. You're focused on the goal. You want the house. You want the loan approval. You want to get to closing. Here's some things that could trip you up. And there's a few of these that I would encourage every buyer to avoid while their loan is in underwriting. So as you're going through this process, and it's challenging at times, don't make it worse, right? Don't open new credit accounts. Don't finance furniture for this new home before closing, right? Don't change jobs without talking to your lender, right? That's a source of income, and you don't want to jeopardize that. Don't make unusually large deposits or transfers without documentation and without talking to your lender. And most importantly, stay in communication. Small surprises, little things can become large delays if your lender doesn't know about them, right? You're going to hear me say this because we create processes for a reason, but trust the process. One thing I've learned over the years is that uncertainty creates more stress than reality, right? The process is there to reduce uncertainty, right? You're moving through a set sequence, right? It's a structure. It's something that gives us confidence. We're not trying to create more stress. When buyers understand why documents are requested, why employment gets verified again and again, why conditions exist, they really should stop assuming something's wrong, right? Okay, we expected that. Yeah, we expected that. Oh, that makes sense. That's the kind of response you have when you understand the process. Instead, you start to realize that everything is going exactly the way it should, right? Again, knowledge reduces fear, preparation creates confidence. Let me give you some final thoughts. I know I've thrown a lot at you right now. Hopefully, it's been helpful. Underwriting isn't designed to stop buyers from purchasing homes. That's not the goal. It's designed to ensure that loans are based on complete and accurate information. The underwriter, your loan officer, your realtor, the title company, and you all share the same objective, getting you to that closing table, right? Everybody wins in that scenario. And when this all happens in the right way and everyone communicates openly, we all work together really well and we get to that closing table. So in closing, thank you again for joining me for part 2 of our lending series on the Next Mission podcast. If today's episode helped demystify underwriting, I'd appreciate it if you'd subscribe, leave a review, and share this episode with someone who's preparing to buy a home. I think it'd probably be helpful. If you're in the Tampa Bay area and have questions about financing your home buyer process, I'd be happy to connect you with trusted professionals and help guide you through that journey. Next week, we're going to move into part 3. So we've talked about finances and we followed your loan through underwriting. Next week comes with one of the most exciting moments in your buying journey, and that's you found the house, right? Now the question becomes, how do you convince the seller to choose your offer, right? You've done all the right things. You've prepared your financial stuff. You've got your letter of credit You found a realtor, you're moving through the process, your priorities in order, and now you found that home, and now you want to win that contract, right? You want to be the one that's selected so you can buy the home that you've been dreaming about. In part 3 of our lending series, Winning the Contract, we're going to discuss what makes an offer stand out, why preparation gives buyers a competitive advantage, and how realtors and lenders working together can help buyers reach the closing table. So until next time, I'm Alex Leonovich, and remember, preparation creates confidence. Thanks for listening, and I'll see you on the next mission.